So we'll swear the assessor in. I'll take the oath, do the oath. Please take the microphone from the stating after you. Do you swear or affirm the testimony you're about to give is the truth, the whole truth, and but the truth? So help you God?
I do.
And your name.
Wendy Thibodeau.
All right, everybody's back. Next matter on the docket is the appeal of S2 Energy Operating LLC versus Lafourche Parish Board of Review, docket number 17-22057-001. This is a taxpayer appeal, so I'll ask the taxpayer to please move forward.
Stephen Marshall with KEA on behalf of S2 Operating. Going to keep this brief. You've heard this argument 2 times. Submitted all the information. If there's anything you want me to elaborate on, please let me know. But this is basically appeal, fair market value appeal. Fair market value. What's something worth? Willing buyer, willing seller. We had all these assets that were recently, I would say, sold by TANA Exploration to S2. When I say sold, they were actually paid S2 to take on these assets.
Now explain that to me.
Okay. TANA paid S2 Operating $1.5 million to take on these assets. So,
But that makes no sense to me, so.
right,
I'm
because
selling
the
my-
value's not, they
I'm
were,
selling my office building, and I'm gonna pay you to take it from me.
you're,
So what's going on here?
in this case, when it was sold, the pricing of it, it was not making money. There's also a enormous plugging liability associated with this asset. So you're taking on a big liability when you take on these assets.
Is there any production happening?
There is production. There are producing properties. And so when this was sold, the pricing, it was not profitable when they sold this, the pricing. I actually included, for this year's rendition for 18, an updated reserve report by well that's been requested, that with the current pricing of January 1st, 18, it was a value of around $9 million fair market value. But back when this was sold, pricing was quite a bit, not too close, was quite a bit different, and there was no value in these assets. They were
Well,
willing
it has to be value if it's, unless they've done something radical to make it production. It had to have value even when it was sold, because they're producing. I mean, unless they did something.
Right, and there's your operating cost. I mean, a lot of it is you're servicing debt, or you're generating revenue somehow. You got to keep these assets going, and a lot of times you shut in a well. There's you could kill a well. There's not a chance to bring it back online. There's a lot of things that go into this, but mainly, I believe the plugging liability associated with all of these wells
But
is
it's
what.
operating, it's operating now.
Correct. But
So
there's
it
still a
could
lot.
not operate
There's
at the
quite a
time
bit
of
of
the
shut-in
sale.
wells that in this field that were sold, and it's the plugging liability that comes with you having to pay to plug these wells.
But you haven't paid them, so that's not a current expenditure, right?
Correct, but that sits out there. Whether they pass this on to 2, 3 different operators, that plugging liability is always going to be there.
And you're requesting a value of $18 million.
No, I believe
$100.
$100. Speaking with S2 Energy, who bought or received $1.5 million, it was their recommendation of $100 because at the time when they acquired it, had zero value.
Let's go
I
back
don't
to
understand how you have zero value.
that. Let's go back
I mean-
to plug-in liability.
Yes, sir.
If you sold it, would you still have that plug-in liability? Is that what you're saying?
No, sir. So I'm operating now. I sell it, but you would have that liability. So you would take that into the fact of what you paid.
Right. So I think, I gotta agree with the chairman, they had to have that some value.
I mean, present day and where we are with the price of oil and everything, I agree, it does have value. There is value to it, and we represented that with our 2018 returns. But for 17, there was not a value, and there was a sale to indicate that, in which I know there was questions last time I included a PSA. Well, this time I have the actual closing statement that shows, TANA paying almost $1.5 million.
Let me ask you,
Yes,
if
sir.
I own a piece of property, and I want to sell it to you, but at the time of the sale, there are no tenants in the property. Is the property worth zero?
I would I mean, it all depends on what you're using it for, where it's at. I mean, obviously, if there is some value there, I would.
Okay, well, that's what I'm asking here. I don't see how you can say there's no value
But,
to it when within a year, it's producing.
okay, so
Now,
say
I don't
that
know if the
if
assessment
there's
value is right or wrong, we haven't gotten there yet.
Right.
But to say it's zero, if nothing else, it's got potential value, and the potential value is at least what it's producing a year later. So I'd pay you for some, if I could take that piece of real estate that I'm buying, say, from you, that has no tenants, it's got value. Now I have to go out and go get me 2 or 3 tenants to put in this little strip that I own. But it's got value, even though on the day of purchase, maybe it might be worth a few dollars more if those 3 tenants were in there at the time of the sale. But to say it's worth zero because there's no tenant, when in fact there are tenants out there you can put in there, I'm really having trouble with the $100.
what if there was a
I
letter
really
from the
am.
city stating you had to raise that building and remove everything like it was never there?
And if a year later I got 3 tenants in those 3 bays, it had value when I bought it, based on that potential value, on the value it would have in the future.
I mean, oil prices have gone up and down throughout the years. We know that, but at the time, there's no telling what it's going to do. I mean, so at the time, I
Parked
agree.
at a
I agree.
gas station by my house, it doesn't go down.
I know, I agree. It's going up, and like I said, our rendition, our
Right.
opinion of value for 2018 has changed. I mean,
Yeah.
we rendered value based on what it was worth on 1/1/18, but it was a whole different pricing scenario. These assets were out on the market for a long time, and it took them paying somebody $1.5 million to divest of these assets. I mean, a general business person, if I'm selling something, I want as much as I can get for it.
Okay.
I mean, that's, I'll answer any
No,
more
no,
questions.
no,
I know
I'm-
you have the information.
No, I mean,
We
I
argued
just,
this.
I'm not getting it, but
This was an asset purchase?
Correct.
And what did you render in value as far as 1/1/18?
For 18, I believe it was fair market value of 9.1 million.
how much you said?
9.1 million.
9.1.
Yes, sir.
And pretty much the only thing that changed based on your testimony between the $100 and the 9.1 is the price of oil and gas,
Yes, sir.
which made your asset more valuable.
Yes, sir.
Anything else?
I mean,
Okay. Assessor's office.
Gerald Block on behalf of the Lafourche Parish Assessor's Office and Miss Wendy Thibodeau. The problem that we have here is essentially that there's not enough information in the taxpayer's appeal to make a determination about what fair market value is. They start their appeal by essentially saying, well, you're required, the assessor's office is required to go ahead and do a fair market value assessment. We agree with that. But where is the information that justifies what they're saying? What they've done is they've furnished us with an asset purchase agreement. The asset purchase agreement says what it says about the $1.25 million. I think it's interesting, and I think it's telling, that if you look at this sheet, which is their submission, part of their submission, this sheet, which basically is the final settlement statement, and I'll just wait till you get,
Yeah, let me,
you can wait till you get to this document.
it's part of the, that's the settlement agreement?
Well, it's.
Is it this
Final
document
settlement.
here?
It says final settlement
It
statement,
says,
yes.
yes,
that's it.
yes,
That's it.
yeah, that's it. Well, if you look at what this final settlement says, under it says a PSA section, and it says 4.3, prorated 2017 ad valorem tax estimate, meaning this is what TANA paid or offset to S2. TANA has paid $295,000 as their pro rata share of the tax assessment for 2017. Now, they didn't, that's a calculation they provided to the tax commission. So in other words, TANA certainly is saying, look, as far as this is concerned, 295,000 is the tax assessment, our part of the tax assessment, meaning TANA's part of the tax assessment for 2017. When you look at
About
the
6 months, right? Since
yeah,
it
well,
closed.
about 6 months
Five and a half.
because it's dated May 10th of 2017.
And those weren't contested by TANA. I know
Right.
that there were 2015 and 2016
Th-
maybe
yes.
that were.
They
The-
protested
right.
their taxes both of those years.
But then what they furnish us with is this purchase and sale agreement. They furnish us with an addendum to that, and then they furnish us with an evaluation summary. But in terms of what they have furnished us, and honestly, the evaluation summary is dated as of January 1st, 2018. There's no evaluation summary for January 1st, 2017, when the assessor's office was required to value this property. And if you look at this valuation, this January 1st valuation, it's really a projection, is all it really is. And I've seen hundreds of these in my practice of law, and what they really are is just, if you look at the tables and the estimates, it's like, how much do you think this is gonna produce in 2018, 2019, 2020, 2021? All of these years going forward. So none of this is helpful to a fair market value determination in 2017 of January 1st, 2017. So instead, I think you fall back on, well, what are the tax commission rules and regulations that the assessor's office followed? And so what Ms. Thibodeau is going to talk about is, what did her office do to make a fair market value determination according to the tax commission rules on oil and gas properties during January 1st, 2017?
So what we did is took all of their information with their pipelines and, all of their personal property, including the pumps, wells, tanks, so forth, and we put them into the defaulted tables that are set by the rules and regs, and came up with any obsolescence that they were entitled to if the well was shut in. By January 1st, it got the shut-in status, and obsolescence, 90% obsolescence, just like it's called for in the tables. And that's how I came up with the assessed value. But in addition to that, any well that went shut in from January 1st until the closing of the rolls, I gave them shut-in status, even though the law says that it's supposed to be shut in as of January 1st. In order to help them out, I gave them, and it was approximately about 20 wells that got the 90% obsolescence that in fact really should have been still producing. They were producing January 1st, is my point.
So you gave obsolescence to the shut-ins as of January 1st, but then you went an extra step, and any shut-ins up until the time you
Yeah, my
rolls
roll
were
closed.
open,
Mhm.
you also considered those,
Yes.
that were shut in, you considered those also?
Even though they were producing on January 1st.
Right.
I gave them shut-in status, even just to help them out.
And they didn't request that, you did it on
No,
your
I did it
own?
on my own. Because I knew that this sale had taken place and that they were trying to get this field up and running. So anything that I can do to help a business out in Lafourche,
Sure.
I'd rather them in business than out of business. So that was something that I could do to help give them a little bit more obsolescence, which 90% obsolescence is a big deal.
So what we have here, I think, is we have a situation in which S2 is essentially saying, look, we think this ought to be valued at $100. They've provided kind of a skeleton of information, but not enough to really help the tax commission make a determination about fair market value as of January 1st, 2017. And therefore, I think the issue would be, well, the assessor's office went by the rules and regulations, followed those rules and regulations, in order to be fair to the taxpayer, went a little bit beyond that to help the taxpayer. We know that TANA paid a pro rata share of the taxes to offset in a final determination based upon the sheet that they provided of $295,000 that there is, that TANA paid to S2.
And that was correlation into what assessed value?
The actual assessed value.
The actual,
The 36
the
million?
assessed.
Of the year, I think it was from the year before,
Right.
Which would have been,
more.
Yeah.
Assessed value
It
than
would've
what I
been
have
more.
this
looking
year.
for that word.
It would have
Yeah.
been higher.
It would have
Right.
been higher.
So, and what we look at is we look at this purchase and sale agreement that doesn't really help us on fair market value. It's just whatever deal was struck between the parties, but without any explanations about what the ingredients are in this transaction. And then if you look at the evaluation summary,
That's
it's
projection.
purely a projection about production and reserves, and that's only part of the calculation that we have to make as of what's production as of.
That's this report here?
Yes.
That is what I'm talking about, Mr. Wagsback. And so we're looking at this, and there's not enough meat on the bone for the tax commission to make a determination about this based upon January 1st, 2017.
Yeah, and having said that, this valuation is as of December 31st, 2017, obviously not too far off, but if I'm reading this correctly, it has a present worth of 37 million in reserves, okay, so.
That's overall the field. If they were to completely drill out every single location.
I understand.
That would be what it's worth.
So how would you correlate that to a taxable value in your world?
What we do, so, in Texas, discounted cash flow, obviously, minerals are taxable. We do PDP reserves, which is what I gave you that equated to the $9 million. PDP is every well that's been drilled, produced, developed, probable. PDP, so every well, what are those producing wells? Not if we spend $20 million to drill 100 more wells, just throwing a number, it'd be worth possible this. That is what that number is. So the PDP reserves are, the current wells in the ground, the value of those wells.
Would you address the pro rata tax payment that was?
Correct. So obviously this appeals for 17. We're well into 2018. Those taxes have to be paid whether you agree with them or not. S2 had to write a check for the entire amount. That was their share of that check that had to be written,
And y'all contested that, Senate
Correct.
contested
Right. This is what
that.
we're here for. This is those taxes that were prorated into this is what we're contesting now. So
So
obviously,
they're now 3 years and 2 of these are in district court?
I believe that's still correct. I haven't talked to
No?
Tana. I haven't talked to
Okay.
Tana.
Okay.
I don't know what that
No.
status is. So, and I mentioned that to him.
Yeah.
Yeah.
We talked a little bit before, but what has essentially taken place is that the challenge for 2015 is in district court. There was no challenge for 2016. In other words, TANA came to the tax commission. The tax commission ruled in favor of the Lafourche Parish Assessor's Office last year. And TANA did not challenge that valuation in district court. So there was no amendment to the pleadings, Mr. Chairman, or, and other members of the commission about that particular one. And
So their
Yeah.
Schedule 10 is incorrect where it says that they had paid it in based on the same arguments.
That's basically true. They did not
They
challenge
didn't
it
do it,
any
okay.
further in district court after the tax commission ruled.
And I think that's where I got my 18 million earlier. That's what they requested the taxpayer last year.
That's
Yes.
correct. That's where you got your 18 million.
Yes,
Mr.
that was
Bertram.
last year.
And now this year, we're at 100.
We're 100.
She's wrong here.
Yeah, yeah. it's
You know, we've asked for a little, we've asked for half, we've asked for, I mean, I would like help from you, I don't know, they're at $32 million, obviously, 32.7, obviously you get paid 1.5. In my opinion, fair market value of doing this, that's, something can't be worth $32 million if someone's gonna pay you to take it. And in regards to all the information, I've been asked each year for more information from the commission, and I try to provide all of that. We asked for a detailed well-by-well reserve report. As of last year, we provided one for the whole field. This year, it's well by well. We had questions about the PSA. Well, there could be other stuff. There's a closing statement. I don't know what other information is needed. I asked the assessor with my rendition for 18, what do you need from me? What information do you need from me to help, get this where it needs to be? And I still haven't, so I don't know. I keep on hearing there's not enough information. I don't, under a detailed reserve report, and you say projections, every operating company in America has engineers that run reserve reports that value their stuff for bank loans, for SEC reports. They're all projections. None of us know what's going to happen with this industry tomorrow, the next day. It's all projection. That's how valuations in the oil and gas industry are done on the upstream side, is by projections.
Except we are here for the tax commission to make a determination upon information provided to the tax commission. And I don't know how, other than what the assessor's office has done and followed the tax commission rules and regulations, I don't know how you would make a guess, because that's what you would be doing essentially.
Yeah, I don't think we've seen anything that shows that she erred or
Precisely.
did something inaccurately. So we stand here today, we can't correct something that was done proper, at least based on what I've seen so far.
What,
Using, for example, her plug and abandon. I mean,
Shut in.
shut-in.
Correct.
She's at 90%. If you choose to plug and abandon,
I'll take it off.
you
Correct.
take it off. I mean,
I'm not the operator. I'm just here. We're here to determine fair market value. We have I would say, much better information than the tax commission schedule has to determine the value of these properties based on what someone actually paid for.
And I would also say one thing. Just, I respect Mr. Marshall, and I respect where he's coming from, but he said something. I've tried to get information from the assessor's office, from Ms. Thibodeau, and I haven't been able to do it. Sometimes I tell Ms. Thibodeau she's too forthcoming about things like that, and so my thought is that anybody that knows Ms. Thibodeau knows that she's always willing to provide information, and that's from the taxpayer standpoint, anybody. We're not trying to do anything to put anybody out of business or harm anybody. We're just trying to do our job in the assessor's office, and I can assure you that if Mr. Marshall wants to have a conversation with Ms. Thibodeau herself about the renditions for 2018, he's...
And I've always been consistent. And I mean, I understand that they're in the oil and gas industry, but I also have watercraft. When watercraft is stacked and not working, they get 90% obsolescence too. I don't take them off the roll just because they're not working. And it's the same concept. I'm just being consistent between my entities. And, if they're entitled to obsolescence, I will give them obsolescence if they can, but I need something that I can hang my hat on, that I can go back to my school board and so forth and explain to them why I'm lowering the assessment, and that has not been provided.
And you
Did-
lowered the assessment
Yes,
over
ma'am.
$4 million from one year to the next?
Yes, ma'am.
Is that correct?
Yes, ma'am.
did the taxpayer file their rendition for 2017?
Did they?
Yes.
Yes, they did.
We filed this for
And did
TANA.
they, yeah, and,
Correct.
and when they file the rendition, did they run numbers, so to speak? I mean, I know a lot of times, a lot of the bigger companies will go and they'll report everything, but they'll go apply the tables, in this case obsolescence, they'll do all of
For
that.
seven-
Or did they just provide the basic data to you?
We
Yes.
provided our renditions.
They do.
I thought we had
This
say
is-
around a $20 million value on there, looking for just some additional
And then they
obsolescence.
use- this is-
Once S2 took
What
over.
what I'm saying is, but the rendition that they filed, did it run all the way out to an assessed value?
Yes, they did. Yes.
And what was that value that ran out to? Total value that ran out to?
Well, all of the shut-in wells, they gave themselves zero value.
Okay.
Wait,
Well,
let me get to that.
I'm not saying you agree with what they did.
no,
I'm
3
just
million.
asking-
It was $25 million.
What's the number?
25
The
million?
market value was 25 million, and the assessed value was 3.8 million.
About-
15%.
Do you have any idea what the shut-in value would have added to that with your 90% obsolescence given?
I-
There's a
It would
bunch
have
of
been what
them.
I have rendered.
There's a bunch of them at 90%.
Oh, most of their wells are at 90% what I have on, but what they rendered, their
Zero.
rendition, they put it to a zero value.
Yeah.
I think that's the biggest difference.
That is,
between
that's
the
what the
two.
That is
argument's
the
been every year,
difference.
is they want zero value for the shut-in wells, and I give them 90%.
And since I'm not 100% knowledgeable about all the terms, for the record, define a shut-in.
A shut-in well is when they temporarily close it. Like, they close it enough to where if the market comes back, or if it's cost-effective for them to re-drill it, or if there's other issues, they shut it in, and then they can go back. The biggest difference is that they can go back and re-drill that well, and they can that well can produce. If you plug and abandon it, they cement it, and you can never re-drill it again. It can never make another dollar. To where the shut-in wells have a potential of being able to produce money, oil, which in turn would generate revenue.
And there's an argument that they don't like to shut them in because of the cost.
Correct.
Plug and abandon because
They
of the
don't want to
cost.
plug and abandon it because of
And
the
there's always a
cost.
fight with Department of Natural
But
Resources.
then when they leave it shut in, the whole reason why he paid the 1.5, and because of the liability of,
Right.
well, you can't have your cake and eat it too. If you, obviously, Tana paid them $1.5 million because of that liability that they carry by not plug and abandoning the wells. If they would have plugged and abandoned the wells, the liability wouldn't have been there, therefore Tana wouldn't have had to pay the 1.5 to get them.
Okay. Any more questions? Any other information? And just so we're correct, I understand you're asking for a value of $100. Is that correct?
At this point, I just know it's not 32. I've asked for a little, been shut down. I've asked for half, been shut down. Now, I don't know where to go with getting additional obsolescence. I just know what I have is a fair market value versus 32. It's not there. I don't know how to, where it needs to be. I've tried so many methods. I don't know what to do. I've asked, and I would like the assessor, what information do you need? I've asked that. I can't, assume what information would help us out that I haven't provided, and I'm willing to provide it. I don't know what else to do at this point. I've asked.
Well, she's giving you 90%. She's following the table, so it sounds like it's a 10% argument,
Okay, but
right?
no, on those wells, they're already getting an 88, most of them 88 to 85% obsolescence. So it's just a small 5% obsolescence on 20 wells. The shut-in wells, they're still producing. I just know, valuation guy, what's something worth? I bought my house for this, that's what it's worth. I mean, that's fair market value in a nutshell to me. It's,
And the assessor's office, your value that you're asking for is,
The 32 million.
okay, because we have different numbers
Yeah.
on the appeal sheets.
I think we're.
That we have, that will
Regina has
file.
the correct number.
So, yeah, well,
I've got the number
I
over
think she's
here.
got a correct number.
I've got a $36 million figure.
That's the year before.
I think our sheets are
Chairman,
incorrect.
I noticed she attached the year before Tana's appeal sheet from the prior year.
I did, my
With-
office did?
No.
Oh.
Ours did.
On their briefing sheet.
Got it. Okay, sorry.
She
That
attached
was ours.
last year's.
Well, I'm looking,
This is
Okay.
it. There's a-
32 million, okay. that's-
I know, I was about to go back to my office. Sorry.
Is that-
It's the same thing on her. Last
Smart
listing
Department's
first.
will check it.
Okay.
And you do understand that the shut-ins are never going to zero.
yes, ma'am.
So $100 is,
I worked for a company, I was told,
Uh-huh,
we're appealing
here-
values $100.
Gotcha, I understand.
Yes, ma'am.
I'm ready to make
You
a
wanna
motion.
Sure.
Yes. Mr. Chairman, in the matter of S2 Energy Operating LLC versus Lafourche Parish Board of Review, docket number 17-22057001, I move that we uphold the Board of Review value of personal property of $32,633,600.
Second.
Commissioner Vercher,
Yes.
Commissioner Wagasback,
Yes.
Commissioner Wood,
Yes.
Commissioner West,
Yes.
and Chairman Shahardi.
Yes. Thank you all.
Thank you.
Thank you.
Thank you. Thank you.
Thank you all.
Thank you. The Tax Commission hereby accepts all pre-filed documents and oral testimony into the record as Taxpayer Exhibit 1 in Globo, Assessor Exhibit 1 in Globo, and Louisiana Tax Commission Staff Appraiser Exhibit 1 in Globo for each appeal hearing conducted today respectfully. The last appeal listed on the docket today was settled. There being no other matters to come before the commission at this time, I will accept a motion to adjourn.
So moved.
Second.
Commissioner Vercher,
Yes.
Commissioner Wagasback,
Yes.
Commissioner Wood,
Yes.
Commissioner West,
Yes.
and Chairman Shahardi.
Yes.